Hey everybody, welcome back to our show, the Tips for Mortgages show. This is my cousin Jaden Bax from Avenue Financial. He's a mortgage broker just outside of Calgary, Alberta. I'm Mike Parkinson with Dominion Lending Centers, a mortgage broker on Vancouver Island and beautiful Campbell River, where it's snowing like crazy today. I don't know what's going on, Jay. That should be you guys, not us.
Oh, we've had it. We've been living with it for the last month, so you guys can take a little bit. I don't like. I'm sitting here in -20. At least I think you're not sitting in -20.
I think it's about -3 or -4. It's pretty cold.
You have nothing to complain about.
Yeah. Anyways, today we're going to have a very hot topic, which a lot of people are a little bit stressed about these days. We're going to talk about the difference between the variable rate mortgage and the adjustable rate mortgage. So I call them both variables, but they're different in different ways. A true variable rate mortgage is one that has a static payment, which means your payment stays the same unless you make changes. An adjustable rate mortgage is one that changes as Bank of Canada prime rate and the bank's prime rate moves up or down. So it automatically changes your payment. And I was just telling Jay, there was a stat that I read that most of them seem to be static payments, which kind of blows my mind. So basically, we started like a year ago, Jay, hey, at like 1.5% range. Let's just call it that. If you started at 1.5%, now you're way up around the 5% range or higher. So it's getting pretty scary for people. Obviously, the people that have been in the true adjustable rate mortgages, the ones that change as the interest rate changes, they've seen quite a high their payment change quite drastically. People that have been in the static payments and the variable rate mortgages, they're hitting a point called the trigger point if they haven't already hit that. Do you want to talk a little bit about that, Jay?
Yeah, absolutely. And I think one of the things that you said early there is worth mentioning. Just in kind of general parlance, everybody calls both of these mortgages variable, and so most people don't even know what they're in, if they're in a true variable or an adjustable. And so these people that are in an actual adjustable have seen their payments go up, and so they know they're in an adjustable now over this last year. But these variable rate people in a true variable with static payments might not have known, and so this trigger point has become part of kind of the collective consciousness now, because what's happening, generally speaking, in a variable, because the payment doesn't change, the only thing that changes is that maybe you're making a little bit less towards your principal and a little bit more towards your interest, right? And that's the way it's going. But things are getting pushed out so much to the point where you're not making enough payment towards your principal. Your interest payments are so high that your amortization, which is the total length of your mortgage for qualifying purposes, and how long it will take you to pay down your mortgage, is getting pushed out beyond where it should be able to go. And so now all of a sudden these banks are having to come back and say, like, listen, you came in and you only had 5% down. Let's say you're a first time home buyer, or somebody just moved houses. You only put 5% down into this home. But these differences in the principal and interest mix have gone so drastically in the wrong direction that we're actually going to have to change your payment. And if you can't change the payment, we're going to ask you to make a lump sum payment to make up for what's missed to put you back on track. It's causing a lot of panic among people in that situation.
Exactly, and people, it's getting back to the whole mortgage issue. Is you need to understand what you're getting into. Like people just don't. It's like, oh, I got the best rate. I got the best rate. I got the best rate. It's like, well, do you know all this stuff that's going on? And there's been lots of issues with people that just are like, oh, I can't believe what's happened to my mortgage. So there's a lot of options there. But basically, in a nutshell, you get to a point where you can't even make the interest portion of your mortgage. That's exactly what Jaden was saying. So there's options there. If you've been increasing your payments, which you can do, you can call your lender and increase the payments as you go. You're not going to hit that trigger point. So that's option one. Option two is putting a lump sum money down, which most people don't have. And the other option is that the banks are just converting people into fixed rate mortgages, which are much higher than what the variable is. And then there's other ramifications if you ever break that, right? So
Yeah,
there's a
and
lot of
that confers
yeah.
the conversion into fixed now is just because we know that there's people who aren't hitting the trigger point that the banks are reaching out to convert into fixed because they're scared of what's happening with variable right now, with prime and everything right now. When we think we're at very near the peak of what we'll see prime being over the next 5 years, and so it's basically, if you're hitting that trigger point, you're not getting thrown any life preservers. They're throwing you a bunch of bad options to choose from, right?
Totally. Well, and if you really think about it, when you got your mortgage and you did a stress test, even if the interest rate was, in the 1.5% range, your stress test was probably around 5% anyways. So that's similar to what you're at now. So basically, you could afford it, you just didn't want to pay it. I get it.
That's right.
But you're there. You're there now, and I don't think you're. I think we're going to see a little bit higher here in the near future, Jay. That's just my thought. And then at some point next year, we're going to have to see a trickle back down on interest rates too. They just can't sustain it. Like, the world can't sustain these high rates. But for now, with inflation the way it is, we're going to see a few more hikes. So we'll see what happens there. But that's kind of the difference between the two. If you have any questions or concerns, reach out to either one of us anytime. Give your bank a call and see what the options are. But we're going to try to, we keep our clients updated on what's happening with variable rate mortgages, adjustable rate mortgages. So they're pretty aware of what's going on. So again, anytime you need us, we're here. Have a great day, and we'll talk to you real soon. See you, Jay.
Thanks, guys. See you.